play. Alrighty, g'day, g'day everyone, and welcome. Quick sound check, thanks, folks. G'day, Richard. G'day, Multi Spirits. Spirit Trader, Big Mike, Davo, Richie, Beatty, Dev, Pasalio, Brandon, Greggs, Adro, Forex Jules, PDF, Wizard Elvin, Tan, Mr. Badger. Gosh, it's going a bit fast for me. Willie, Tara, Cedi, Hamish, HR Alpha, Ronald, AJ, very good. Hedis, Dennis, Mark Jenkins, very good. Celsi, Hyasbeck, K Chan, very good. Java, Mika Con, Mubam, there we go, got that right. Des Bell, Andrew. Thank you, folks. All right, so welcome to Wednesday workshop, folks. And hello to anyone that I missed as well. G'day, Ahmed. So, folks, tonight's workshop, we're going to have a look at a question that was put forward by a member. And that member was AJ. Where is he? AJ underscore. There we go. Mr. Badger. Omelo. So before we do that though, folks, just a little bit of housekeeping. So those that are new to the Trading Academy or to the workshops, let me just first show you. Oh, sorry. Okay, so where do we find the previous workshops, etc.? Scarfaith, very good. So go over here. Okay, see it here, the home page. Sorry, the Trading Lab, right here. So click on that. Go to the Trading Academy here. Click on that. So here's your trading tools, weekly market reports. Click on that. So here's Andrew's Academy. Here's Max's Academy. So here's mine in here. There's 9 modules and 162 videos. So when you do go through this for the first time, there's workshop modules A, B, and C, but it's important that you start at the numbered modules. So module number 1, module number 2, module 3, 4, 5, and then module number 6. So work your way through the numbered modules first, and then start with the workshop modules. So here's module A, which is everything to do with trading process. Module B, trading psychology. And module C, member workshop. So tonight's workshop will go in here. Okay. G'day Trade Tech. So if you click on these, you'll see everything to do with any of the workshops to do with process. All right, so you can see them all here. There's an enormous amount. All right. So click on go back. Anything to do with any workshops to do with trading psychology. All right, there's my journey, my own trading journey. So what it took for me to be consistently successful as a trader. So there's my story. So there's a lot of the psychology lessons. And then we've got member workshops. So here they are here. So you'll see examples of pullbacks as well. All right, so go and have a look. We've tried to title it accordingly. So price acceptance and breakouts, position trading, fib retracements, head and shoulders, engulfing patterns. Okay, support and resistance, breakouts, position sizing. G'day Jesus. Adrian, can this be followed again later? Yes, it can. It is recorded, so you can watch the replay. All right, so there's a huge amount of workshops there, folks. So there's another Q&A, analysis checklist and trend anchors, trend and momentum analysis. So there's an enormous amount there, folks, but work your way through the numbered modules first and then come back into the workshops and grind away through those, folks. So there we go. So that's where you find it. Click on the Trading Lab, Trading Academy, Click on mine there. Start at the numbered modules. Okay. All right. So we've got a question today from AJ in regards to pullbacks. Jesus, can I do EuroCAD? We'll see if we get time. Excuse me. So let's just start basically with. Well, no, we'll go into the question first. So AJ has asked. You can probably all read that. Would be awesome to get a drill down. We did a little bit of this today in the stream. So it's difficult to spend a lot of time in the regular stream expanding on a lot of these. So I try and do them in the workshop. But if you go back and have a look at today's stream, we did a little bit there as well. You're welcome, FRX. So AJ has asked, it would be awesome to get a drill down into ABC and entry points, the riskier entry, early entry, and the safer entry on a break of B. Also, what you personally do, market entry on break of B, or do you wait for price acceptance above B or the pullback into B? When would you consider one or the other option? Be keen to hear how you trade and trade those solutions. Basically, when and how you pull the trigger. A lot of people get good value out of it, yes. So if the ABC correction is happening and there's a big drop on C leg, what entry points would you look and consider then if the overall direction is intact above the 61 and above 20 EMA? Would you be looking at the latest valid anchor on the short-term move, the pullback, to continue the overall direction, potential entries in different time frames, etc.? Okay, all right, so let's have a look. So then we'll address the normal entries down here. We'll have a look at some of these, but let's just first pull apart just the classic pullback. So when price trends, it makes pullbacks. So here's our single leg pullback. We also get a multi-leg pullback. So there's other types as well, which will get more of a complex pullback like this. So this is a multi-leg pullback. And we can also get pullbacks that do start as an ABC and then create a base and then head off. So each of these is basically just a type of pullback. All right. So some of you may also see some of these as just our falling flag. All right. So that's a common name for just a pullback. Okay. Now, what I look for also with any of these pullbacks, where these appear, I look for the pullback to key moving averages. All right. So the one that I use the most is a very basic 20 simple moving average. All right. There's nothing special about it. So I want to see these pullbacks at or near this 20 period. Why? Because this is like an area of value. So price extends away from it and pulls back into this. So I'm looking for opportunity around every time it comes near this 20 period moving average. All right? Now, this 20 period moving average can be usually either on the trading time frame or the lower time frame entry. Now, the trading time, we'll deal with a couple of time frames. Weekly, the higher time frame. Daily is the trading time frame. The lower time frame will be the 4-hour or the 60-minute. Thank you, Zeus. Zeus says I'm very skilled with the mouse. Takes a bit of practice. So So now we understand what most of these pullbacks look like. Now, there are different types, of course, of the pullback, but the one that we're going to deal with the most is the ABC. Okay, ABC. So this is a multi-leg pullback, and part of the reason why this is so effective is because classic Dow theory traders, so let's imagine we've got trenders like this. Here's our most recent anchor. Well, a lot of people see this as a lower high. So a lot of traders will enter on the break of this swing in between. So we've got this trap situation occurring in here as well. All right. Okay, there's the direct link if you've got problems buffering, folks. So I think maybe with, yeah, it's okay. It's okay here in Southern Hemisphere. It might be those in the UK we tend to find. So one of my favourite trades is the ABC, where we've got the existence of trap traders in around this area here. So what we're ultimately looking for is for price to continue on the original trend. So, I mean, here, of course, is our 20 period moving average. So prices come in at or near the moving average, the 20 period. And that's a rising 20 period in this case. Now, these, let's have a look at the different time frames. Let's say this is appearing on a 60-minute time frame. So let's have a look at first, and let's do the multiple time frames. Let me get a better colour. Weekly, daily, and the 4 hour or the 60-minute are our time frames. So this is the higher time frame, the trading time frame, lower time frame entry. So you imagine what the weekly looks like. All the weekly is going to look like is just one bar, isn't it? The daily is probably going to be one bar, and you may even just get a slight pause, but it'll probably move off. So the area that we're interested in is just this. Now, the 4 hour or the 60-minute is where we will get price looking like this. Okay, so we have to remember now, if we've got our, so let's say this is a 4 hour, here's our 20 period. You can imagine that the weekly is going to be nowhere near it. It's going to be contained somewhere inside the bar, and the daily could even be somewhere in here, or it might be this little area here. So we're looking for price to pull back to the 20 period, 20 meters, 20 period simple moving average on the lower time frame. If we get this structure on the daily, we need to wait for another setup in this region here. You'll get them, right? But you won't, excuse me, but it's too early to entry. It's too early to enter because this is the trading time frame, not the entry time frame. So just try and picture this multi-time frame, what the multi-time frame looks like. The weekly's hardly anything. The daily might be one bar, right? So this is our ABC here on, say, the 4 hour. Now, when we get the 4 hour looking like this, so now we know what it's possibly going to look like on the higher time frames. Let's have a look at the 4 hour chart. So here's our 20 period. Price has moved up, and it's given us the ABC through here. So the safest entry is going to be through B wave. Why? Because once again, those trap traders that have seen this swing and this lower high have entered in here, and they're probably going to have their stops in this region. So this is the safest area. But those of you that have watched the breakout videos will know that we're actually looking for a breakout through B. So the pullback trade has actually turned into a breakout at B. So we still need to see something in here, okay? Because if we get too sharp, price comes up, too sharp through it, that's when we'll get the fake out like this. So we've got that stretched price action. So we still do want to see, on the 4 hour, we do want to see 1 or 2 bars of just stalling price action in here. So price is coming up, got a bit of a stall. Not too sharp. The price has come into it. A couple of stall bars. That's all we need. Right? Just a pause. But what's important is also that we're seeing steady trending action into it. But we need to see not a sharp move straight through. We need to see some sort of accumulation, which is basically can be 2 stall bars in here, in order to take the breakout. So there's our classic breakout entry through B, which is the safest entry. Why? Also because, as we said before, B also is the short-term anchor to this downtrend. So when price breaks that, we're now returning to an uptrend. So this is the safer entry. Now, quite often we may not get see inside price here. It may be necessary to zoom down to, say, a 60-minute chart and look for what we see in here that constitutes an accumulation again. Right? So this would be the 4 hour and this would be the 60-minute. So notice what we've got on the 60-minute as well. Yeah, yes, Tony, very good. We'll see if we can find some. It's always important to see this in real life. Yes, Mr. Badger, well done. So now imagine what this looks like on the 4 hour. So the 4 hour is probably going to look like this, isn't it? One stall bar and through, isn't it? So take note of what you're seeing at that point. So, Davo, yes, kind of. So Davo said, yeah, copper. Let's have a quick look at that one. Yeah, very good, Davo. So, all right, good observation. This is one this morning that actually triggered this morning. So let's have a look while we're at it. Yes, waterfire. You can use it on any time frame. So the daily. Here's our 20 period. Single leg pullback. Price has started to move off. So we're back to an area of value. So when that occurred, now this is kind of a little different in as far as it's probably not an ideal example because it's under the 20. So that pullback on the daily was this one. All right, so the daily 20 period is through here. So naturally we're going to be under the 20 period on our 4-hour chart. So what we were waiting for was price to get above it. So let's have a look in this one then. This may not be the best example. Okay, so here was the entry. So on the 4-hour, or even on the 60-minute, here's our ABC in here. So here's B wave, so price shot straight through it. And here's a kind of a wider accumulation through there. So this is actually a pause under this, just pause under resistance with a shakeout. Now we won't go into this, but yeah, this type of entry is what we're looking for. We saw this today. So yeah, this is probably not an ideal one, but there's the ABC, right? So we didn't get, now you can see on the 60-minute, there's not enough bars. Now actually this is a good example because the 60-minute, when it's tight, you've just got to take the breakout entry because there's not enough bars. Notice this? If you wait on these, on the 60-minute to try and get, you know, bars in here, you're going to miss a lot of trades. So yeah, that's probably, may not be the, yeah, international prosperity. Yes, definitely a buy stop. If that's, yeah, probably not an ideal one. All right, let's go back. What was I on? Pound. On the pound. No, all right. This is what I have to do. So what I'm going to do is bring up the example that Mr. Badge has asked. And then I'll try and expand on that as well. So I'm going to kind of do this in a bit of a roundabout way. But what we don't want, for starters, is we don't want price to break the anchor. So we want this ABC to still be in a trending environment, and we want to see a nice impulsive leg through here. And those of you that know the 40-60 box, ideally we want it in there. The 40-60 box is simply retracement of the most recent range, and using 38.2 to 61.8 levels and the 50. Okay, so we ideally want the pullback into this area. The shallower the better. So, you know, if we looked at one like this, it's already attempted to break the anchor, hasn't it? So they're not the better ones, and chances are the 20 periods like this. All right, so there's a chance here this will just pull back and then just continue down again, either as a reversal or just a deeper pullback. Okay, because remember, in Elliott wave terms, we often get a deeper pullback after the fifth wave. So here's the 20. All right. So just be careful with the ones that penetrate the 20 period. So let's have a look at another question. So in that example, sorry, that's probably, okay, let me stop jumping around. So in this example, where we get the pause, so this will be our 4-hour chart, say, with this structure here, most visible on a 60-minute. And here's our ABC. 20 period coming in here somewhere. Here, take the breakout order, say 5 pips above B. All right, so use a buy stop in that instance. All right, and your stop can be below the swings. Doesn't need to be all the way down here. So that's the safest entry, because what we're assuming now is that this counter trend move is over by getting price acceptance and the trend beginning through this key level here. This is B wave. All right. So wide structures, you need to drill down. If it's a 60-minute, back to the 20, you'll probably only get 2 or 3 bars and it'll be straight through. So you just have to take it. So that's one entry. So the question as well, oops. If the ABC correction is happening and there's a big drop on the C leg, what entry points would you look for and consider then if the overall direction is intact? Okay, above the 61 and above the 20. All right, good question. Would you be looking at the latest valid anchor on the short-term move pullback? Yes, to continue the overall direction. Potential early entries and different time frames. Yeah, very good. All right. So, our A, B, and then we've got C. That's gone deep. Now, yes, Mr. Badger, very good. We need to create a market structure pattern for you, Mr. Badger, that includes volume. The Mr. Badger volume signature or something. Somebody come up with something. So, A, B, C's gone pretty deep. Got our anchor here. We're still within the 40-60 box in this area here. But we've got C has gone very deep. So, often when we get these deep C's, this is where we'll get the V reversal, isn't it? All right. So the V reversal is one. And when we come out of the V reversal, we're looking for accumulation once again. So, excuse me. So what we need to see though is, what I've indicated in here is the very short term, which will be probably evident. So let's say this is a 4-hour chart. Here's a 20 period. These anchors will be probably more obvious on the 60-minute chart. So we're looking for the main trend to obviously continue. The anchor's still intact. Here's our complex pullback. We've got an impulsive leg through here. So one of the gauges that price is starting to now trend will be when it breaks this 60-minute anchor. So you can even look for a breakout through that anchor. Okay? So that's one early entry. You want to have some sort of suitable pattern here that's kind of evident though on the 60-minute or the 15-minute. The ultimate early entry, the ABC, would be so here's the 4 hour, 20 period, volume surge, and we've got a hammer as C wave. So it's broken B, so it's broken through A. We've got buyers have stepped in because of the wick. It's right in an area that we like. So we've got a couple of enhancements here, haven't we? We've got one, we've got the hammer. 2, we've got the 20 period. 3, we've got volume. So there's 3 enhancements to this, isn't there, for starters? So the very earliest entry with this is a break above the hammer. All right, so that's a single candlestick pattern in there. All right, now if you do that, your stop needs to be here. All right, under the hammer. What you risk though is rather than wait for here or a swing, is you risk that this is just a temporary reprieve and price pulls down a bit more. Yeah, Dave West, very good. You can. So Dave's asked a good question. Do we wait for a confirmation after the hammer? You can. So you could wait for maybe a bullish engulfing. What's happening though is we're kind of now getting away from the wholesale entry. You get a small bullish engulfing, that would be okay. One of the earlier entries, even again, one of the safer entries is this. Evident on the smaller time frame is the swing. So you imagine in Elliott terms, 1, 2, we're looking for 3, aren't we? So we've already got this higher low. All right, so let me draw that again. There's two. One of those is the existence of a reversal candle in here. Entry, now the reversal candle also could be this. So we've got a bullish engulfing. So you can enter a break above the bullish engulfing. Or you can wait. We've got our swing through here. So this here will be evident on a smaller time frame. Now, even better, if we've broken the anchor here on, say, the 60-minute. And if you're really good, you can get in here. All right? If you drill down in there, you might find a little ABC in there again, in this area here. All right, don't be too fussy. You stop there or you stop under there. All right. Another entry. We get a pause at the trend line. Through there. There's another one. Okay. So There's an add point, isn't there? So let's have a look what Alright, so let's have a look. So AJ has given us an example. So this one here, the 20 period is probably a bit wide here. But I reckon it's curling up like this. G'day, Jeff. All right, so we've got, here's our range. All right, our 40, 60, it's going to be right on it, isn't it? It's going to be deep. This is a deep pullback. All right, this is pretty deep. You can see here we've actually got a couple in here already. See this? So this is, remember this is the multi-leg one. Right? Here's one here. See it there? ABC. Here's a single leg. It's an unusual one here. It's a single leg. So this is a bit of an extended version, but what this gives, it's a good indication of some of these entries. So let's have a look what we've suggested. So we've got in here, so here's A, B. Notice we've got the V reversal here and the cradle lookalike. Right? So we've got that existence of shakeout. It doesn't matter what the time frame is. Here's the anchor. So the uptrend is intact. We've got the existence of the cradle. So we've got, so you could take it right above the anchor. I'm having trouble zooming in. So you could take it right above the hammer. Or as Dave West has said, there's a good little, I know it's hard to see there, I'm sorry folks. There's a bullish bar there. It took its time, but there's a bullish bar there. So we've got the hammer. Then we've got a back-to-back hammer, and then we've got a bullish engulfing. So you can take it above that one. Right, so there's C right there. But notice here, we've got the swing now too. See this? We haven't got the existence of an anchor through here, but you've got a swing here. So that could be one. Yes, absolutely. So two is kind of the same. Okay, and 3 or 2B is a break up through B. Oh, sorry, that's 1, isn't it? Yeah, very good. All right, now I understand. So the very first one is, so here's our trend line through here. So you could take it on a breakthrough there with a slight pullback. The cleanest one that I like is the accumulation at B wave here. The 2A option is the, whoops, break through the swing there. So this one, right here. So there's our swing. And 2B would be, so let's imagine that we've got this. So 2B would be a break through this anchor. So if we had this setup here, is that not equivalent to some sort of accumulation? So entry through there, break of the anchor. So I think we've covered most of the entries. So what we're looking for really is evidence that this C is shaken out and we're now trending, starting to get a move back into the trend line through here. I mean, you could even get one through here, like pull back in here, through there. Right? We've done everything we need to in here. If you get that anchor break, that's another, another added enhancement. I mean, the ones that I call are usually in here because these are the safest. Right? Yeah, Dave. Yeah, Dave's got it too. So if it breaks this sharp, the pullback afterwards, look for the same thing. All right. Now there is in the workshop. There's pre-accumulation. There's 2 workshops on these breakouts through here, and there's 1 workshop on pre-accumulation breakout patterns. Right? So I suggest go and look at those. We've got the various types of breakout patterns. So let's see if we can find some examples. All right, so gold. Notice gold here. It's given us the big ABC. It's at or near the 20. Would we take it off this time frame? Probably not, the daily. So notice I've got the weekly, got the daily. We wouldn't take it. Well, we've got the structure on the higher time frame, the trading time frame. We've got the breakthrough here. So really, we'd now be looking for something in here on the smaller time frame. We've got a swing through here. All right, now this is actually A, B, shallow C, which I won't go into. All right, but the same applies. Notice where we're pausing. So when we drill down to the 4 hour on gold, this is that ABC. Now this is a bit of a messy setup, but you can see we've got all the look here of what we want to see coming out of this low. So we're now looking for something. This is pretty big and wide, so not the best example, but you notice I've marked this here. Here's another one. 4 hour, 20 period. A, B. Now here's a shallow C. There's the entry there. That's pretty ideal, that one. All right, gold's probably not the best example. I think New Zealand gave us one. No, that doesn't look as good. It's an Aussie Swiss. Yeah, it was. Okay, here's a good one. So notice here, Aussie Swiss. ABC. Right, here's our 20 period. Right, so C is at or near the 20 period. Could we take the break through B? We could, but this is the daily chart. Right, so you could, but your stop would be all the way down here. So about 140 pips, it's pretty big. So what we saw though is when this appeared, this gave us the heads up now. The price is probably going to be pushing up. So the area in question, I think, with this one is here. So take note that we've got the ABC's ignited it, we've got the breakout, and we've just got one inside bar here. So this is what we're interested right here. Pretty sure this is it. Okay, it's not. All right, let's look at, though, this area in here for an early entry. So here's that big ABC on the daily. So we've drilled down. So there is that little pause. We haven't actually broken the anchor, we've just broken a swing. Right, but we've got a pause, we've got an ABC in there. So notice this here has given us an early entry into this, right here. So the area I was actually looking at was this. There, so that's the early entry. There's the breakthrough B. Notice we just had a minor pause. Once we've pulled out though, we've actually got a bit of a swing in here. All right, so this is not our clean ABC like this, but it is an ABC. So, you know, you could take the break through there. But yeah, this is probably not the best example either. So we see on the lower time frame. No, that's not good either. Aussie dollar. There's a couple just last week. Oh, there we go. It was on Aussie dollar. No, these are bigger versions. There's a dollar Chinese. They're usually not that hard to find. Okay, here's a good example. Dollar Chinese. See, we're getting the pullback on the daily. Oh, I know, Dave. I should have prepared one earlier, shouldn't I? Right, now here's the pullback on the daily. It's tried to break a key area. So there's the big impulse. Here's our ABC. Now notice here that this was right back to the 20. So this was ideal. Notice how the early entry would have triggered you in above the hammer. Right? So that one would have been a loser if you had taken the very earliest entry. So what we've actually ended up with is now a swing like this. All right. So here we go. Here's our 40-60 box as well. And notice what we're getting here, the big bar here. We're getting an attempted reversal through here. So here's our multi-leg setup. So once again, break through the anchor. So that's where we're looking. That's actually on our list, I think. All right, so here's one that's just turned into something a bit deeper. So you can see it's no longer above the 20. So this is where I usually look for a secondary entry above, when it gets above the 20. Right? Only because the pullback's got a bit deeper. It's coming to an area that we're not comfortable with. G'day, Densky. Bitcoin. G'day, Grump. Thanks, Grump. All right, there's one. So here's the 4 hour. Right, this is in an ideal location as well. So we've got this base, resistance. So we've broken through it. So I'm interested in the pullback in here. G'day, Dan Joe. There we go. Right, so here it is here. So here's the push. Right, so look through for the bigger swings. So there's a very shallow one. Right, so the entry would be through B because it's so shallow and not many bars. And you can see what price actually did was actually gap through it. So you could have actually opened the trade on the gap with your stops through here. Let's have a look at this on the 60-minute. See if we can pull anything out of it. Okay, there we go. So there's what our 60-minute looks like. So that could have been your early entry through there. Well, price is just above the 20. Right, you won't get price on the 20 here because it was so close on the 4 hour. Well, there you go. There's our trade from before. Okay, there's ours from today, or a couple of days ago. Testing that channel line. There we go. Anyone getting that one? So the power of the simple trend line. See that? See where price is now? See the price tested it, rejected it. It tested it once before, and now it's had a second go at it. Right to the tick. So it's reacting there, but here's our accumulation, isn't it? Under the trend line. Here's our 20 period. Right, so this is not bad. This is not bad as a pre-accumulation breakout. Now, it's not a classic ABC, but it's a variation. So we might have to leave it there, folks, I think. So look for those yourself. See if I can find a couple just quickly for you. Sure I can. All right, here we go. ABC. Back to the 20. Right here. The stock. $50 period. ABC. Aussie yen. A, B and a shallow C. Break through the B. Another one here. Here's the 20 period. Yes, it will, Adele. All right, now here's a bigger one. All right, went above the 20. So we need that secondary confirmation. See the swing in there? Or you go through B. Wait for it to give us something around B. It's not a good one. It's not a good one. All right, here's one. All right, not a lot of bars, so you just take the break straight through. See it there? Back to the 20. Here's one. Pound, 4 hour. A, B, C. Oops. A there, B there, C in there. It's a big one. It's a big one. It's a big one. Here's one. 20 period. Big move. A, B, C. Break through the B. This is better. Yeah, Davo. Build a plan around these are high probability setups. Here's a beautiful one. Push. A, B, C. Not many candles. Little pullback in there. Straight through. 20 period. They've got everything lines up here. Got the rising 20. Got the time and price box. Got minor resistance, major resistance. Got the existence of reversal candles. Oh, ideal. There's one. Back to the 20. Dollar yen, 4 hour. It can be that as well, Tortoise Trader. Yeah, very good pickup. All right, here's $2 Singapore, 4 hour. All right, see this one here, look. Back to the 20. Narrow range, so you take the breakout. Here's another one. Right? The shallow version, yes, is exactly that. It's a pennant. So there's two of them. See there? One there, one there. Right? So there we go. So add that pattern, folks, to your arsenal of setups. But just remember, it's all right, AJ. Did we answer your question properly? Add this setup to your arsenal of setups, but make sure you go and test it. Right? And just make sure that you identify where it's appearing as a high contextual area as well. Just remember that every setup, just by itself, in isolation, needs the same contextual status. So if you've got an A grade setup, but a C grade context, there's a chance that that setup will fail. So, price action is king, or the setups are king, but where these appear is equally as important. So there you go. So add that to your tool belt, Grump. Add it to your bow. All right, folks. So re-watch it if you need to, but more so go and spot them for yourself. All right. The smaller ones are better. The bigger ones, wait for secondary entries. All right, folks. Take care. Trade safe, and talk to some of you tomorrow. Bye for now.